Hi there, I'm Caroline Woolley of Meaden and Moore Forensic Accountants. I look after the London office, and this is my video interview series called Business Interruption and Other Stories. I'm interviewing interesting people that I've met along the way over the last 20-something years. And today I'm interviewing Alstair Burns, somebody else who I worked with at Marsh all those years ago. He's gone on to some amazing adventures, which I'm going to discuss with him today, and I will let him in. And he'll be with us shortly. Here he is.
Hello.
Hello. Hi, Alastair.
How are you?
Okay, thank you very much for joining me today. I'm back down with the fish. Oh, I can see there's a board there as well, and some extra background detail for today. We've already discussed my antenna, so apologies for the lights. Not a lot I can do about that, I'm afraid. But yeah, thank you very much for joining me. I just very briefly explained that we worked together at Marsh and that you've gone on to some amazing adventures since then. So I don't know if you want to, I know it was Broking World and a couple of different brokers, but it's your new venture. If you wanted to maybe just do a quick introduction, and then I'll do a few questions to take us through this interview.
Excellent. All right. Well, listen. Thank you for giving me some an opportunity to stand on the stage. Alstair Burns. I've spent 35 years in the marketplace. I'd probably call myself a product of the London market, but have spent a reasonable amount of time in the US, Bermuda, particularly in Europe, and I have, as broker, I've performed a number of different, or run a number of different businesses around the world and different functions, and latterly spent the last sort of 4 or 5 years at the Hartford, formerly the Navigator Syndicate. So that's sort of 35 years as a broker and underwriter. And yes, I had an opportunity at the beginning of last year, coincided with lockdown, strangely, to set up a new business, which has been called Axiome Partners. I'm one of 2 founding partners to it. It's a data science business, and it's based on some work that Stanford University and UCL have been pursuing for some while around a concept called computable contracting. And a computable contract, to put it very simply, is a contract that's both readable both by humans and computers. And my partner, John Cummins, and I met. He doesn't come from the insurance world. He comes from the data science and manufacturing world. But the 2 of us came together and realized that the insurance industry has a unique opportunity, a unique business model that lends itself perfectly to the use of computable contracting. So it didn't take us long, a couple of months of chewing this through, testing the subject. John actually published a white paper on the subject back in March, sponsored by the Lighthill Risk Network. And that was really the impetus to get this going. And a year in, we've been pulled in many different directions because what we talk about is interesting to people. And I think, if I think about why I've driven back in here, or why I've jumped in here rather than go back into the more conventional roles within the market, is I'm still dogged by a couple of things. Insurance is a brilliant invention. It's essential for business on so many different fronts, but it still runs, and it still runs at something close to a 30, and in some cases a 40% cost base. It's a very expensive product. And I think we haven't put enough time and effort into dealing with that really fundamental issue. And the London market tends to the upper end of the expense range for the commercial marketplace. And I think computable contracting could play its role in quite profoundly addressing some of that market problem. So I think it's a combination of, I wanted to try something new. This was an exciting opportunity. And I think there's a genuine opportunity for computable contracting to bring some change to the market. So I suppose that's why I decided to strike out and set this up.
And yeah, because it's, I mean, you are in the driving seat now for that technological change, and you obviously think that there is a real opportunity for cost saving in the insurance industry. Mm-hmm. But you know, as you celebrate your first year, as you said, it's the first anniversary of Axiom Partners. What's your vision then for the insurance industry and yourselves? And, you know, what might be some barriers to success?
Interesting. So when we talk about computable contracting, what it's important to point out is this isn't a piece of flying car, Elon Musk technology. We're not trying to put something on the moon here. Computable contracting really talks about adopting a form of manufacturing, if you like, that most other manufacturing industries use, whether it's an aircraft carrier or an iPhone. The concept of modular manufacturing is well understood and well practiced by many industries. And the modular manufacturing drives efficiencies, it drives all sorts of benefits to the industries in which it sits. And the insurance industry has been impervious to that forever. The insurance industry has been impervious to a number of things, and technology as a basic driver has not really left its mark on the industry particularly well, especially in the commercial space. So a computable contract, we think, is a vision simply because it talks about adopting modular manufacturing. And we believe if the industry were to adopt the concepts of modular manufacturing, it can transform its path towards a digital future. So it's not so much the clever nature of a computable contract, but it's actually the more fundamental issue of adopting modular manufacturing that I think would bring a sea change to the industry. And so for Axiom, as part of that vision, you know, we started a year ago. We started as 2 of us. We're now 6. We are being well received by brokers, by insurers, and by some of the market's institutions as well, in terms of the promise of computable contracting, what we think it could do. It doesn't come without its challenges of implementation. And when you talk about barriers, part of what we're endeavoring to do here is really look at creating an insurance policy that is best described as a couple of thousand pieces of Lego. So when we talk about computable contracting, we're talking about data science. We're talking about pulling apart a contract and reconstructing it in a way that a computer can read it. So the hard part of modular manufacturing is we've got to pull these things apart. We have to pull contracts apart. We're pulling literally words and sentences apart and putting them back together again in structured form, in a standard form that a computer could read and understand. So when you start to dig into some of that, the skill sets in the marketplace, well, the number of data scientists, the number of wording experts are short in supply. But this move to a modular concept, modularizing insurance policy, requires not only the knowledge of the policy wording itself and how it works, but the data science that allows all this to come together. So barriers to entry to me are, from a skill set perspective, there are some challenges, but these aren't insurmountable. These are simply needing to be found and tasked in the right way. The other barriers to entry are I think some of the natural challenges with insurance full stop, and that is we have an industry with huge inertia. You know, renewing the policy is the pursuit of much of the value chain, because that is the lowest effort and that inertia we have in our industry, it is a great plus for the investors. It's a great plus for how efficient the industry can be, but it also, I think, stands in the way of being able to adopt new ways of working. And
I know that the concept is the computable contract, but as you were saying, it's so much more than that, isn't it? Because it's a platform for being able to do more with your data collection process in terms of accuracy, rather than a manual process. And I know from our broker friends, they're still dealing with that issue of we talk about business interruption values and making sure you've got understanding the right principle, but actually there's a level before that of just accuracy, because this is information being rekeyed in manually, and you worry about the basic accuracy. So there's different levels, but all of that can obviously, you can help with the computable contract as a basis, but also the data outputs and everything you can do with the data afterwards. As well. So yeah, it's a platform for, I can understand the simplicity of the computable contract, but it's a platform for doing so much more. I've had a bit of background noise. You may have heard the little fella crying. It's really difficult when you're working from home and you can hear them, but the grandparents are here today, so he'll be having a nice cuddle with grandma now, so I know he's okay. But it just woken up, but sorry about the background noise. But he's happy again now. You were saying also about the you have to pull it apart first, and I think that's part of the problems that we'd seen. I was working with a technology company doing the risk and management information systems, the RIMIS systems for policyholders and risk managers, and it's a great system, but basically it is bringing in, it's a platform for collecting documents that are still in PDF or Excel. And you need a sort of extra layer to that. But even doing that process, it was very difficult for them, because they were just trying to replicate the manual processes they had before into a new technology. But actually it's the pulling apart and the rethinking. Don't just recreate what you had before and do what you had before, because actually there's probably a better way of doing it, and the technology doesn't work the same way as the brain. So yeah, I think that's,
I'll tell you what is fascinating is when you start rereading an insurance policy, which in truth I probably haven't done for a while, you do take a step back and realize that we produce insurance policies for our customers. They are very regularly 50 pages of impenetrable legalese. And when you start to have to pull this apart, really read and understand what's going on in these documents, you start to remind yourself how little work we have done in trying to create a product, a contract that is easily accessible or readable by the customer. And one of the things I think will come out of the adoption of computable contracting, along with that ability to use and manipulate data more easily, is the communication with the customer. And that sometimes, often in a wholesale market, especially the London market, can get lost. That customer is at the end of a long value chain. A computable contract could simply take the form of a website, where actually instead of handing a client an impenetrable 70-page document, a computable contract might look like a website. It might actually look like a website that could be transformed into something that a client could read easily. It may have a legal document and then actually a separate rendering that actually a customer could read easily. Some of our customers are even attaching, for example, Alexa files to computable contracting contracts so that they can actually be read or interrogated using a smart speaker, for example. So my point is, computable contracting not only allows you to start to manage the data and allow those data flows to have some more standard to them, I think it will also transform the way we can communicate with our customers, which I think will be welcomed by all.
Yeah, it's definitely the sort of the foundation for so much more. And you know, I know that more recently there's things tend to go in the too difficult box, because there's so much disruption, isn't there, at the moment, with, or has been, with coronavirus and all the changes that have happened. But one of the first, it was actually the first interview that I did in this series, it was with Julia Graham of Airmic, who you know. And Julia was saying to make the most of this time, and, you know, use it to reinvent, to innovate, to, you know, make changes, and really, you know, do what you can to make the most of this time. And it is difficult to do that. I know quite a few people have sort of reverted to the norm for the moment and said, like, we'll carry on as we are until we can get back to some normality, and then we'll do things. But actually, yeah, it's sort of grabbing the opportunity now while everything's a bit up in the air anyway, and actually doing it.
I think listen, I mean, our experience has been there is no lack of interest in trying to move the game on a little. I think, you know, we talked earlier, I think COVID-19 has been something of a gift when it comes to change, and everybody has now witnessed what can be done in very short order. We've all gone home, all come back again, or are in the process of coming back again, and the businesses have basically not faltered. So I think we've proven to ourselves that things can be different, and we can change if we want to quite quickly. And so I think, you know, things like computable contracting are important planks to a digital future for the marketplace. I have a slight fear, you know, that the marketplace, and, you know, I'm talking to the specialty marketplace here, is through 2022, I think, going to start to soften. And when premium rates start to come down again, income starts to come down again, and the whole issue of expense starts to rise again. And so we are going to head back into a challenge around expenses. And at a baseline, our industry globally is operating at 30. At the top end, it's something like 40. And the issues of tackling that cost base, growing the business, communicating better with our customers, will all come piling back onto the agenda after 3 or 4 years of rising rates, which has taken some pressure off a lot of people. So that idea that, you know, we can back off, I think, will quickly ebb away. We do need to continue to push on with this journey towards a digital marketplace and a digital industry. And I think it will supply all sorts of benefits to everybody in the value chain. But I'm a great believer that an analog world is where we are still. And although we're trying to head in a digital world, or trying to embrace that digital world, we are hanging on to analog things. We're hanging on to documents, two-dimensional documents that may be expressed in some form of digital fashion, but we have yet to make that step. And for me, the analogy is a simple one. Oh, but the simple analogy, I think that the one that grasps most is, you know, in our lifetime, we held on to LPs and cassettes and CDs. Spotify now deals with that problem. So we let go of the analog stuff eventually, and we went, okay, let's have a digital version of this. And we've all jumped into that space, and actually we've landed and gone, this works. And our insurance world, we've got the same problem. We're still hanging on to insurance policies that are paper, that we know and trust. And we have got to get to that Spotify moment where we let go of these things and we allow things to change. And that's a big jump for the industry. It's a big jump for everybody individually, but it's an inevitable one, and one that everybody has got examples in their own life that they can reach out to.
And Cass Whitaker has just taken over as CEO of Self Wealth. It was another video that I did that's just been released, and it's to encourage investment. This is over in Australia, and they've allowed cryptocurrencies in, and it's just like she was saying, you've just got to take the leap sometimes. And even though, you know, you're faced with risks everywhere and you do what you can to control those risks and understand them, but actually you have to look at the benefits as well. And sometimes take that leap and, you know, deal with it. And it's something that she was saying that, you know, about diving in and how, you know, sometimes it's difficult for any industry, and definitely a maybe more traditional one like insurance, to take that leap. But it's don't feel that you're going to be out of control. And that's something actually leading on to another question, because I've referred to business interruption in the past as the fear of the unknown, because it is sort of, you know, it's quite complex topic and can put people off. And if you do the, you know, the fear of the unknown and business interruption and add a technology digital layer as well, you know, we might scare people off completely, but we obviously want to avoid that. And that's why I'm an advocate for any pre-loss work. You know, don't wait for a loss to happen and discover there's something wrong with the policy or with the cover or with the understanding of the business and what's at risk. So, you know, you do some pre-loss work around BI, including, you know, I'm an accountant, so I talk about numbers, but it's the quantification of the exposures. How do you know if it's value for money or not if you haven't quantified your exposures? So all of this work up front just makes people feel a bit more comfortable. So, you know, from your perspective, what are you doing to try and soothe people and help them to take that leap?
It's I think that leap comes with, and I think the hard leap is understanding, I think, what a digital future might look like. And it sounds like a sort of a very sort of nebulous statement, but, you know, the hard leap is the jump from an analog world to a digital world where you agree to do things in a different way. And so for us, you know, you know, Caroline, you've listened to us talk about computable contracting, John and I. One of the things we try and, you know, hammer home here is, you know, as I said earlier, computable contracting as a technology is not an Elon Musk flying car piece of technology. It is actually, the concept of modular manufacturing is not a complex one, and actually it's one that you quite quickly get to understand, that you have more control and more understanding of what's going on when you adopt it. So I think for us, for many of the people that we're talking to, you know, the promise of an improved future on a number of different fronts helps people get their heads around it. And also some simple things. You talked about business interruption. You know, we're working with one insurer in the market at the moment to create a modular property business interruption policy form, which will start to morph and change as the coverage options are selected. And business interruption particularly, we've now pulled apart the policy wording, put it back together in a way that means when an underwriter selects an industry, and the insurance policy actually reforms itself to take the base of a certain business interruption calculation methodology based on what they expect that industry to need. And so instead of ending up with a policy that is this thick, we've got something this thick, because actually what we've done is selected all the relevant pieces for that particular client, for that particular industry, rather than have something that is really dense and far harder to read. So simple things like having the workbench for the underwriter select the types of business interruption that are going to be applicable to this policy are just little elements that make what we're doing, it simplifies the underwriter's job, simplifies the broker's job a little in terms of the product they end up coming out of the backside of it. So
yeah, it allows that guidance though to be built in, as you were saying. You know, it's endless really. we had an example of just a simple, a document that I'd produced, which the risk manager used to attach to the questionnaire when it went out. That's the starting point. But actually, if you've got it all there and online, and I talk about alert systems as well, so you can put some milestones and parameters in there, so that if it exceeds those somehow, then you get the alert system. So there's a lot you can do just in terms of the wording from a modular perspective, but when it comes to limits and values as well, it can obviously help. And hopefully, I mean, I'm on your website, so thank you very much for that as an associate, and hopefully we'll get an opportunity to work on a special project soon.
Listen, I have no doubt that as I say, the pipeline of work we've got coming towards us is filling, and I think the interest in this concept of computable contracting and what it can do will do nothing but, I think, continue to grow. Where it takes root first and where it shows itself in commercial form remains to be seen. As I say, but what I can tell you is we will be working on a project, I have no doubt, very soon.
Yeah, and I think there's the future looks bright, and there's some real opportunities you can do, but it's just getting the basic foundation in there and getting everyone used to it, and then you can work out from there. It's always tempting, particularly for me. I sort of see what can be achieved, and you start talking about those further developments, but it's just getting over that line initially with the foundation and making that change, and then it will all come, won't it?
It will come, and I'm reminded of a quote that was given to me by somebody else a little while ago when they were talking about a shift or a change in industry, and I think it was Henry Ford who made the statement. If I asked all my customers what they wanted today, they tell me it was a mechanical horse, and so. And clearly that's not what he provided them. He didn't provide them with a mechanical horse, he ended up with a car. And I think that the same is true in our marketplace. Is we're hanging on to some analog pieces of our process that we need to at some point let go. And once we have let go, the transformation or the change will be a great one. And I look forward to, whether it's computable contracting or many other of the technologies out there, will create an environment for all of us that will first and foremost produce a better result for the customer. Yeah. My particular beef at a lower cost, which I think is essential. And in an environment where the job roles are different. As I've said in my piece here, computable contracting is going to require wordings experts and data scientists. Well, when was the last time we put those two together and said those are going to be a growing set of skills in the market? But that those are the hallmarks of a different marketplace that I think we'll all thrive in.
And I know in the past that when you've looked at, there was a few projects in the past about sort of the simplification of policies and trying to make them shorter. You're still going to have your definitions, but in some ways there was a reluctance to change too much of the wording, because you've got all this case law behind it, that all these decisions have been made based on the wording that's there, and it's like, well, should we change the wording? Now that's not really what we're talking about here, because you can still have the wording of the clauses. It's just the way it's dealt with, and the method that it's transported, almost going back to your mechanical horse. It's looking at what you're trying to do and trying to achieve, no matter how you.
I think I have two answers to two points on that. I think, firstly, computable contracting, as you rightly say, allows a contract to be broken down into data, so it can be rendered in different ways. So therefore, you can take the 70-page impenetrable legalese document of yesteryear. We can re-render that to the customer in a way that it is easier for them to read. So instead of and there is some effort to simplify language that's been going on in the market, where we start to think about the reading age of the customer and bring it down to, and we have to be careful, because when you reduce the language we use, you do have the chance of, or you do run into the challenge of possibly making the policy too primitive. We're dealing with complex issues and complex subjects, so simply changing the language can, in its own way, cause its own problems. A computable contract means you can re-render it in different ways. It may be that actually one of the first things you give a customer to read are all the conditions in the policy. Here are the 12 conditions in the policy that you need to make sure you're aware of, because those conditions mean that other parts of the policy will become void. So by even reorganizing how a customer reads the policy, you are in a way simplifying it and helping get that information to them in better form. The other thing I would say is that language that has been tried and tested in court is defended in the way you talk about it as well. It's been through the courts, we can't change it. I've now taken to reading insurance policies, which I hadn't done for quite a while. And the language we give our customers is, in many cases, just appalling. It's not readable. It's not easily readable. And I question whether this requirement to hold all the language absolutely as it was, because of a court case of many years ago, relative to the business case of being able to release the industry to run more efficiently, be able to communicate it more clearly. I think that might challenge some of the old adage, we can't change any of these words, because having read them, they're not customer friendly.
They do with a revamp, yeah. But it's a lot of it. We've talked before about matching. Some issues that have come to light with coronavirus and the business interruption claims. Where there's a general exclusion, but an express extension, and the FCA case actually said you can't just put a general exclusion in there and rely on it when you've expressly given an extension. And the way you're organizing this now, you can do some matching. These are your Lego bricks. You can connect.
There you go.
Parts and
there you go. And I think it's really about making it simpler for the customer to read. We all understand that the insurance market never intended to cover a pandemic. The financial wherewithal was never there to be able to cover it. Absolutely. But it's fair to say, clearly some of the customers have felt, like they've been misled in some way. And so I think being able to re-render a policy in a way that a customer can then read it easily and absorb some of this information, rather than trying to push their way through 50, 60 pages of legal contract that they're not trained to understand, is a tough ask.
And I think there's a lot that we can do. And we said that the insurance industry is actually quite innovative in its thinking, and some of the products that it produces and its quick response to customers' needs. And I used the supply chain example and non-damage BI previously as being actually ahead of the game, and the industry, the risk managers not necessarily being clear on that risk yet and not ready to take that step to the risk transfer piece. And that's very relevant here, because there's the property damage policies, some of the non-damage cover with infectious disease crept in, and with pandemic, and all of these specialist policies excluded pandemic, even though they're specialist non-damage BI policies. So I think it's just getting to the stage where making it more simple but clearer for everybody, doing that matching process, giving everyone that understanding. But I do look forward to what we can do with these inputs and outputs as well, in terms of back to the numbers again, but in terms of the data and the numbers and the analytics too. So yeah, it's a very, very promising future. And what I'll do is I'll include a link to your site, because you've already got information, interesting information on there. But this is it's a great topic for our industry, but others as well, as we do, I think, take that leap. People will be taking the leap. It's only really a small jump. It's not even a leap. This small jump towards the digital world, and that digital platform is going to be great. So thank you very much indeed for joining me today and for the discussion. And I look forward to, well, seeing you hopefully in London soon, as we all start to return. But definitely working with you soon too. Thank you very much,
Caroline. Thank you very much for your time, and thank you very much for the opportunity to talk to you.